Great to have you. What was the biggest surprise out of Janet Yellen for you? Was it the fact that we learned more hikes, 3 for 2017 and 2018, or the fact that there was no mention of China or the political risk that we see in Europe?
She was quite hawkish, in fact, last night, but it was really the amount of interest rate hikes expected. So going 3, as you mentioned, in 2017, then in 2018, and then 2019. And so the risk really for Asian countries is capital outflows, especially China. If we were to look at the glass half full, though, usually or historically, Asia performs quite well in a rising interest rate environment. It shows higher growth, very good for exporters, especially Asia ex-China exporters.
So in terms of the market reaction, obviously we're following what happened on Wall Street overnight, so we're seeing everything being sell off right now. How does this compare to the market reaction that we saw back when the Fed actually decided to raise rates a year ago for the first time in a decade? I mean, we saw a 7.3% drop in stocks after the following month. Are we going to see a similar type of follow-through?
Well, this hike rate was very much priced into bond prices, into equity prices. I guess it's about defining gradual versus gradual. And that's what the market's really going to be looking at. So again, how many rate hikes are expected, and the pace and the amount of these rate hikes is also key.
I wanted to get your, take on the international risk, though, because it's sort of the chart here for Catherine to see about China risk. Obviously, we have seen the return of unease. Stocks are lower. The yuan hitting that 8-year low. 1-year bond yields as well, also spiking. We just got that new credit data jumping again. Will the risk remain roughly balanced, as the Fed has mentioned, or could these events really shift what the Fed does in 2017, where the dots will have to come back down?
It's really very much, when we look at sentiment across the market, what is going to be the catalyst for asset classes being re-rated next year? So again, when we look at the pricing in of these Fed hikes, when we look at China, the economy is expected, or we expect the economy to continue to muddle its way through. Infrastructure needs to pick up. Very importantly, we actually need to see state-owned enterprise reforms, again, being implemented. But when we look at China, next year, it could be more of a relative trade in terms of China. We're seeing a political transition in the second half, so we expect to see a lot of status quo in regards to policies. But again, it'd be great to see further SOE reform.
What does this mean for Asian currencies? Because we see the dollar continuing to spike up after this Fed decision. And we see, obviously, Kuroda-san, I'm sure he was cheering in his sleep overnight on this decision. But EM Asia, though, we see what the ringgit's doing, what the won's doing. Dollar-pegged currencies like the Hong Kong dollar here are vulnerable once again. Will Chair Yellen have to address this?
Well, she'll have to address it. The politicians and governments across Asia will have to address it too. Again, it's very positive for exporters. But let's take the case of China. I mean, the Chinese growth story is about consumption going forward. So we can't have too much of a devaluation or depreciation of the RMB, because essentially it then erodes the purchasing power of the Chinese consumer.